If you've been trading for more than a few weeks, you already know that just having a strategy isn't enough, because in reality, your psychology is what will make or break you. You can follow all of the technicals, study setups, have a perfect trade plan written on paper, and still sabotage your results. Not because your system failed, but because you failed to manage your emotions. In this video, I want to walk you through 5 of the most dangerous psychological traps that most traders fall into, especially newer ones. These are mistakes I've made myself, mistakes I've seen repeated in hundreds of traders I've mentored, mistakes that leads to blown account, broken confidence, and years of regret, unless you address them early. So today I want to break down the most damaging psychological habits I see, and give you real, practical solutions that can help you start trading with a clear mind and a confident edge. Let's start with something that might sound trivial, but is actually one of the most common dangerous triggers I see, especially for newer traders: your chart colors. Most platforms use bright green and red candles by default. It looks great visually, it's what we're all used to, but it comes at a hidden cost. When your brain sees a huge green candle shooting up, it subconsciously registers that as a reward, as a win. And when you see a red dump, it signals threat or a loss. That's not a guess, that's backed by neuroscience. Bright colors like green and red triggers dopamine and adrenaline. They make your trading screen feel like a slot machine and not a work environment. In fact, many studies now show that people who switch their phones to black and white grayscale mode drastically reduce their screen time, sometimes by over 50%. Why? Because they're no longer getting those dopamine hits that make apps like TikToks or Instagram addictive. And it's the exact same thing in trading. When you remove the color, when you set your charts to grayscale, your emotional reaction to every move becomes more stable. You stop reacting to every little green push or red wick. You stop chasing, you stop panic selling, and you start thinking. Switching your charts to grayscale on TradingView takes less than 60 seconds, but it might be the most powerful mental edge that you give yourself this year. Next, here's something I know you've done, because I used to do it consistently. You enter a trade, you got your stop loss in place, you know your plan, but you can't stop watching it. Every 30 seconds you refresh, or you just leave the chart open watching the price jump around. And every little uptick feels like a rush, while every tiny dip feels like a panic attack. The problem isn't the trade. The problem is that you're turning the market into a casino game. When you watch every tick, you're not making better decisions. You're just feeding your anxiety. The best thing you can do, and this has changed everything for me, is to set your levels, place your stop loss and alerts, and close your tab. Get off your screen. Go outside, build your business, take a walk, go cook, do anything else. Because once the trade is on and your risk is defined, you don't need to babysit it. In fact, watching it makes you more likely to interfere with your plan. Personally, unless a trade hits my stop loss or price target within the same day, I just don't touch it. And if I know I'm not going to touch it, then why would I keep looking at it? So I only check my charts again around 5 to 10 minutes before market close to evaluate trims or exits. Trading really should be boring, so if it feels exciting, you're doing something wrong. Now let's talk about money, because that's why most of us started trading, right? But here's the trading paradox. The more you obsess over making money, the less you make. Why? Because you're no longer focused on execution. You're focused on your outcome, and when you chase outcomes, your emotions run the show. For example, think of poker. A professional poker player doesn't care about the chips. They're just a tool, a representation of risk and reward. If you think of each $25 chips as real money, you'll play scared. You won't bluff, and you probably won't play your hand right. And in trading, it's the exact same thing. When you're constantly watching your P&L, thinking, I'm up $80, I should lock it in, or I'm down $100 and I can't lose this much a day, well, you're not following your system. You're trading your emotions. The shift happens when you start thinking in risk unit instead of real dollars. When a trade becomes a 2-hour setup, not a $100 opportunity. The more you detach from the money, the more you focus on your process. And process is what produces consistent profits over time. Now, this one kills more traders than a bad strategy ever will. You take a loss, it hurts, you think, okay, I'll just make it back on the next one. Then you force an entry, you size up, and you ignore your rules. And now you're down even more. Welcome to the revenge trading spiral. This is where accounts get blown. Not because your edge disappeared, but because you went off the rails emotionally. Obviously, losing sucks. That's human. But you need a system for recovering emotionally. Just like you have a system for entering a trade. It's not about being weak, it's about protecting your mindset. Professional athletes have cooldown routines. So should you. This is the final one, and maybe the deepest. Trading is not about being right. It's about being consistent. But new traders crave certainty. They want to be sure before they enter. They hesitate and overthink, then they miss the entry and chase it 10 minutes later. The truth is, no setup will ever feel perfect. You need to act based on system and probability, not emotions. My strategy, for example, the one I teach in my mentorship, has a 35% win rate. That means I lose 65% of the time, but I lose small, and my average win is 3.5 times my risk. I don't need to win often, I just need to follow the rules. And I've run a full Monte Carlo simulation to prove that. 100 different simulations of each 1,000 trades. And it shows that even with long drawdowns, the strategy strategy is working long term. So that gives me confidence. So I no longer need to try and predict what will happen. I just execute the plan over and over again. That's how you go from uncertain to unshakable. Let me bring it back. If you want to succeed in trading, your mindset matters more than your indicators. Fix these 5 psychological traps and you'll be light years ahead of where I was early on. Change your chart to grayscale, log off after entering your trades, detach from the money, pre-plan emotional recovery rules, and stop chasing perfection but start to embrace probability. If this helped you, don't forget to like, subscribe, and drop a comment below. And if you want to go deeper, I have a free guide below that will walk you through my exact swing trading process. The same one that helped me grow my account over 1000% in just the last few years. There's also a free link to my Discord community where I help traders every day. So let's build you into a consistent, confident trader from the inside out. And as always, lock in, stay disciplined, and I'll see you in the next one.